It's time now for the latest from the ENCA Money Desk with David Murugan, who's here. David?
Yeah, thanks very much. As we said earlier, we're tackling business confidence. It remains in the doldrums, giving little hope of an economic rebound soon. The RMB BER Business Confidence Index recovering in the fourth quarter from 20-year lows. But at a score of 26, sentiment among businesses remains deeply negative, showing no broad-based improvement across the sectors. Well, government has been on a drive to convince investors it is addressing corruption, easing regulation and improving governance at state-owned enterprises. But you can see from that graph, since that 2005-2006 peak, we haven't really recovered. And the BCI survey, it speaks to about respondents at the number of 1,800 across 5 sectors. And when we look at the next page, you'll see businesses remain largely pessimistic across all those sectors, whether it's retail, wholesale, building. We are still below that very crucial 50 line, showing some sort of contraction on the sentiment front. Well, let's get into RMB economist Mpho Tsebe. She joins us now for more on this. Mpho, thanks indeed for coming in. So we've had investment conferences, we've had moves to address policy. There was also some moves to change the way the governance occurs in these state-owned enterprises. Nevertheless, businesses largely look like they are unimpressed.
That's correct. And I think the major issue here is that they continue to rate insufficient demand as a major constraint to business activity. And again, that speaks to the consumer story that we've been talking about, that the consumer remains constrained. I mean, if we look at employment gains, we haven't really seen employment gains. If you look at wage increases, the pace of wage increases has actually been slowing. In real terms, wages and salaries are actually contracting. So which is then feeds into the weak business activity that businesses continue to cry about.
And if you don't have that demand, you can't have that activity come up. But when you look at the major job-creating sectors, and we've just seen that graphic on retail, wholesale, building, for example, if you don't get activity up and running there, it's unlikely that they would be labor absorbing. So I would imagine, just given these crucial confidence numbers, we can't expect an upspring in business, in employment anytime soon, can we?
No, we can't. And I mean, if we even look at the improvement in the confidence in those sectors that you mentioned, is that can this be sustained? And if we look at the underlying factors, which speaks to the consumer, which speaks to the global demand as well. So like, for instance, in manufacturing, it's a concern from both the domestic and the global environment that the global growth as well is also slowing. So we need to change the underlying factors. So there needs to be a major drive for employment to pick up. But then again, it then goes back to sentiment, the view that businesses have. If they're confident about that politicians will turn the situation around, then they will start increasing their production, employing people, and we see that pick up in demand.
Yeah, so let's talk about that, because as you started off saying, if there's no demand, there's very little confidence that businesses should plow in money in something that's not going to sort of reap the benefits. But what about that positivity on what government is doing, the structural reform package that seems to be elusive to us? On that side, what's needed so that businesses can have the surge in a belief that the economy can come right in the future? What are we missing?
Yeah, I mean, I think the other thing that we need to consider as well is that if we look at the risks that the country has been facing as well. So we've been having a Moody's downgrade hanging over our head. That causes a lot of uncertainty for the business environment. And if you also look at the SARB as well, they've also been warning about those risks as well, that if we get downgraded, then they can't increase interest rates because that's going to affect the currency. They can't decrease interest rates because that's going to affect the currency. So then it speaks to those little things that we saw. The October medium-term budget policy statement, it presented plans in terms of how government can turn things around. So come the February budget, we need to see that government is really committed about turning the situation around. And I think only then will business start believing on the structural reforms that government is talking about, and maybe changing their view on the South Africa's outlook.
Can we emphasize what's happening in Eskom in terms of the investor's mind? I mean, this is such a crucial part about decision-making when it comes to ploughing in millions into putting up a factory. Eskom's a huge factor, isn't it?
It is a very huge factor. I mean, we saw the impact of electricity shortage, right, in the first quarter of the year when Eskom was load shedding, and we had GDP contracting by 3.1%. And that's the impact of Eskom, and that's why there's urgency to really get Eskom on a sustainable basis. We need to get independent power producers in, because we cannot continue relying on a state-owned entity that's not reliable. It's killing the economy on the production side, because they cannot provide electricity on a sustained basis. They're also killing us on the fiscal side. I mean, if you look at the debt projection that Treasury presented in October, and that's all on the Eskom bailouts.
Just very quickly before I end, so the graphic that we've just seen the last print take a bit of a turn going upwards. Are we in a new direction, a new path now? Can we see this being sustained, you think?
Before we can talk about it being sustained, I think we'd need to see a couple of more quarters of growth ticking higher. And again, we then need to look at what are the underlying factors that would drive that. So we'd need some sort of external catalyst, so the global economy beginning to pick up, a trade deal being reached between the US and China, some of the tariffs that are already in place being scrapped away. That will definitely provide a positive catalyst. Domestically, the key event to watch is going to be the February budget, because that will be telling in terms of whether government is really committed to turning the situation around.
All right, Mbotsebe from RNB Economist, thanks very much indeed.